consecutive months of declines in leading indicators, which we have now, would suggest the same. Now, I think the differences are, we see an inverted yield curve, and that, of course, is also a warning sign. I think our point of view is that this is going to be a severe inventory recession, but we didn't have the systemic excesses like we did pre-08-09 in the mortgage market. So it's an inventory recession here. And while most economists are saying, oh, okay, the inverted yield curve points to a recession maybe next year, we believe we'll be coming out of it next year. Now, I think the big question is what's going on in China. I think some of the commodity price decline has to do with China unraveling in some sense from a cyclical point of view. I mean, they've got their foot on the brake in many ways. They're trying to let it off a little bit here and there. But I think that the real estate downturn in China is 30% of their economy, 75% of consumer savings. I think they're not going to be able to control it the way they thought they were.
Kathy, it's Eric here. I asked Twitter for some questions. I got a good one, and I agree. This is a good question. A lot of people have it. If you believe we're in a recession and you believe the Fed is going to go on a sort of hike-raising path, why not go to cash? Why stick into the fund? It's an actively managed ETF. You can do whatever you want, and I guess some people wonder why not have more of a cash reserve.
We are going to be 100% invested in innovation. That's who we are. This is what we're paid to do. This is what we say we are. And we think that innovation is going to be a critical allocation in the years ahead as the world moves rapidly. And it tends to, innovation tends to gain traction during tough times. Innovation solves problems. We have so many problems right now. We've got the supply chain problems, which we're still hearing about. We've got energy and food prices up because of the war, really hurting consumer purchasing power. And so I think better, cheaper, faster, more productive, more efficient, more creative is going to win. That's what innovation is. So we think most asset allocators are short innovation. And I don't mean NASDAQ 100. We don't think that's truly disruptive innovation. We believe that our ARC is more the old style NASDAQ than the NASDAQ is today, because that's all we focus on.
Kathy, I thought there was a really interesting idea floated on Twitter about a perpetual motion machine. There is TARK, T-A-R-K, that is 2 times ARC, leveraged up ETF. And we were thinking if you bought shares in TARK, then they would have to turn around and buy ARC. And with those increased flows, you could buy more TARK, and it would just really be beneficial to your shareholders. Have you considered it?
No, we have not considered it. That is a swaps-based product, so there's counterparty risk there. And so we have no intention of doing anything like that.
Looking at your fund lineup, you did close your first fund, or you're planning to liquidate the Transparency ETF. And what was the rationale behind that? Was just because there was a lack of asset growth? And I also wanted to ask, that fund had an ESG component to it. It had a filter for ESG metrics. Elon Musk called ESG an outrageous scam. And I'm curious, I know you're a fan of his, what you think of that sort of characterization of ESG.
So that characterization of ESG, what I've always said when people have asked us about our portfolios, I've always said they are intrinsically good for the environment, socially good, and we have a scoring system around governance. So we certainly are focused on doing the right thing, which is what I think ESG is all about. I think it got way out of hand, and there was a lot of slapping lipstick on a pig, and basically any portfolio being kind of promoted as ESG. So I think the misallocation of capital was quite extreme. And as I do the whole index-based phenomenon, the idea that we should look to the past to manage assets for the future just doesn't make any sense to us. So.
And Kathy, I want to switch gears pretty abruptly here and talk about ARK, the business, ARK Investment Management. You founded it roughly a decade ago, almost a decade ago. And ARK at this point is synonymous with Kathy Wood, which I think is the definition of key man risk. And I'm curious at this point, have you thought about any sort of succession plan?
Yes, so I have a very deep bench in terms of talent. We have just promoted within the last 6 months 2 of our senior analysts to become associate portfolio managers, and so they're working with me very closely. When I started managing money, I continued to do research as well. I think it's a very good discipline for us. And even today, I'm doing still a lot of research with our research analysts. So I think most of our analysts, many of them having been with me for the last 5 to it's almost 9 years now, have been taught, or I've been teaching them how to do things the ARK way, because really we're not going to find talent or out there, seasoned talent, because really very few